Hi, welcome to The Trade. Great to be here with you. Well, the Trump administration is reportedly considering a plan to restrict software-powered exports to China in retaliation against Beijing's latest round of rare earth export restrictions. That could potentially include goods ranging from laptops to jet engines. Chinese imports currently face U.S. tariffs of around 55%, which could rise to 155% if U.S. President Donald Trump follows through with his threatened tariff hike. Meantime, UK inflation unexpectedly held steady in September, raising the prospect of a Bank of England interest rate cut this year. Annual consumer price inflation remained at 3.8% for the third month running. Meantime, U.S. Treasury yields have slid for a third straight session amid subdued sentiment as the U.S. government shutdown continues with no resolution in sight. The U.S. Treasury yield fell to 3.44%, while the 10-year yield was down to 3.95%. The U.S. dollar index is little change. The Aussie dollar is trading around 64.9 U.S. So let's get across the charts now to the technical analysis. Curious about momentum? Well, for that, Andrew Gagan was joined by Jason McIntosh from Motion Trader earlier this morning.
Look, some really interesting price action in the markets generally to go through. And so starting off with the ASX 200, which has been particularly interesting, all-time high this week. I think that probably is going to be a surprise for a lot of people because, of course, that follows that sharp 3% down day in the US a couple of weeks back. And when we get those big down days in the US, it often leads to volatility locally. But instead, we've got a new all-time high. And I think this is telling because when people are bracing for a negative response, but instead the market holds its ground and then makes new highs, well, that's often a bullish sign. Just look at the latest price action. All the pullbacks are being contained around the moving averages. So I've got the 50 and the 100-day moving averages on this chart. And that's been the case really for the last 5 months. So this tells us the dips are being bought, and I think the odds continue to favour the upside. And this is typical of bullish phases. So you can just see what happened back in 2024 on the left-hand side of the chart. There were lots of pullbacks to the moving averages. Prices sometimes rebounded quickly, while at other times there might have been several weeks of consolidation, but that underlying trend was up for over 12 months. And I think we have a similar situation now. So despite some of the bearish headlines we might see, the underlying structure here remains positive. We've got those rising moving averages, again, the 50 and the 100, prices above the moving averages, and there's a well-established sequence of rising lows and higher highs. So these are all bullish markers, and I think they set up a bullish backdrop. It's also interesting to look at what's been happening in the financial index. So I've got a chart of that I want to show you as well. So you can see on the top right of the chart, I've got a blue box. Focus on that. So prices have been coiling up along the moving averages for probably about the last 2 months. And when we get these price compressions within a rising trend, they often become a platform for even higher levels. Now, prices hit a new all-time high last Thursday, and I think they're on the verge of a breakout sometime in the next, in the near future. There was the push higher last Thursday wasn't sustained on the day. Prices have pulled back into the range, but I think a break above last Thursday's close, or last Thursday's high really, would be, I think that'd be enough to say there was the breakout was happening and that upward momentum was resuming. And of course, financials are such a big part of the local market, and I think that strength there would be another bullish pointer to an ongoing bullish environment generally. I think we could see some more consolidation in the local market, maybe in the near term, maybe over the next week or two. But that dominant trend, it remains bullish, and I think portfolios should continue to be positioned accordingly.
Yeah, we're going to have to see the dominance of the big four banks, and given how far they have run clearly over the past couple of years. Jason, let's turn to sentiment on Wall Street. It's also taken out record after record this year, of course, and more recently. Now, interesting, as often said, well, more recently about this being something of a hated bull market, despite where we're at the moment. In fact, you've got an investment sentiment survey from the American Association of Individual Investors.
Yeah, that's really interesting. I'll get to that in a moment, and because I think that really helps frame up how a lot of people are seeing the market currently. But it's also really interesting about how quickly the focus has shifted. Just a week and a half ago, all the talk was about the potential for another big sell-off getting underway. When of course we had that big sell-off on the Friday, a week and a half back in the S&P 500. Yet we look at the price action now and it's poised for a new all-time high. And I think this is a difficulty for anyone who just follows the headlines and doesn't really focus in on the underlying price action. They get exposed to an ongoing flow of emotional triggers and it often leads to poor decision making. I think despite the latest fears, I think the evidence points to that recent volatility just being another pullback within a bullish trend. At this point, all we have is one-day volatility, and that's set against a backdrop of rising moving averages. So again, the 50 and 100-day moving averages on this chart, prices above those moving averages, and that sets up a bullish framework. I think we could see some more consolidation over the next few weeks, maybe a retest of the moving averages. I don't think that would be out of the question. Basically some more backing and filling, then that sets up that platform for maybe the next leg higher. But I think that overall, the balance of probability, I think it still favours the bulls. There's nothing here on this chart that suggests we should be anticipating otherwise. And now I want to show you that survey that you mentioned earlier. So this is from the American Association of Individual Investors. Comes out each week, and they survey their base about what they're thinking the market's going to do over the next 6 months. And so this came out last Wednesday. The next one's due out, should be due out today probably. This is one of the most bearish readings in months. And I find this fascinating because we're near all-time highs. Now, just explaining what's going on, look at the top right-hand side. You see I've got a circle around the big red area. So that's showing the percentage of those who are bearish over the next few months. So we've got above average bearishness and below average bullishness. And that's not something I'd expect just before a crash or a major top. So currently there's 46.1% of survey respondents who are bearish over the next 6 months. If you look directly beneath that, there's another circle. That's the historic average. Historically, it's 31% of people are bearish over time. So there's a lot of people anticipating something's about to go wrong. And in my experience, that's not usually how these things work. Sell-offs are typically blindside events where it's shock horror what's happening here. It's not where everyone's smartly lined up waiting for something to go wrong. The other interesting thing is that it really seems to be a polarized market. Look at the neutral percentage. Now that's in the middle. I've got a square around the relevant section. Start at the top. You see the top square, it says 20.3%. Then you look beneath there, go down a few rungs, and you see another box. That's the historic average. It's 31.5%. So it seems to me that this is a market full of people with strong views about whether things should go up or mostly things should go down. I'm neither a diehard bull. I'm not a perma bear. For me, it's simply a case of assessing the market structure, following the price action. As it stands, the moving averages on the S&P 500, they're rising, prices above those moving averages. We've got a long series of rising lows, rising highs. So they're classic trend markers of a bullish environment. And I think the play here, it's to stay long while that's the case. And I want to be positioned with the trend. I don't want to be betting against the trend.
Yeah, it's interesting, isn't it, sentiment? And I guess, should we be surprised though, Jason, given that the market has taken out those successive records and that perhaps prompts nervousness among investors, hence they are more bearish?
Yeah, it's market tops are typically noted about investor enthusiasm, not investor caution. People tend to throw caution to the wind towards the end of a bullish phase. When people are cautious, it tends to fuel ongoing bullishness or ongoing price rises. They talk about, we often hear about the wall of worry, And that's because people tend to get cautious. They're fearful. Surely the trend's got to end soon. But it tends to end with, look at the gold price action recently. It went parabolic for several weeks, and then you get the sharp pullback, just as most people seem to be the most bullish. And it'd be probably unusual for a market to top with so many people looking for a top.
Well, that does it for this edition of The Trade. Be sure to join us for more tomorrow.